Welcome back, everyone. Today, we're going to dig into the latest developments around U.S. export restrictions, specifically hitting Nvidia's AI chips for China.
Yeah, it's a big topic, and it sits right in the middle of that larger U.S.-China trade dynamic we keep seeing.
Absolutely. And there's a pretty hefty financial number attached to this latest move. Nvidia's looking at, what, a $5.5 billion hit?
That's the figure they've put out, yes. It relates to their H20 AI chip exports specifically for the Chinese market. This is really the newest chapter in this whole AI competition saga.
And before we dive deeper, just a quick reminder to our listeners, if you find this discussion useful, please do like and subscribe. It really helps us out.
Definitely. So this news lands, at a pretty turbulent time globally. We've got ongoing concerns about economic growth. President Trump's previous tariffs are still echoing.
Right. And didn't the World Trade Organization just recently adjust its forecast downwards?
They did. They specifically pointed to new tariffs and just general uncertainty around trade policy as reasons for lowering expectations for global trade growth. It all kind of connects.
Okay, so let's focus on this H20 chip. My understanding is Nvidia developed this one after previous restrictions came in.
Precisely. The H20 was specifically engineered to comply with the U.S. export controls that were already in place. It was their way of continuing to serve the Chinese market.
So it was intentionally less powerful than, say, the H100 chip, which was already banned for China.
Exactly. Less computing power designed to fit within the existing rules, but clearly the rules have shifted again.
There was that quote floating around, I think, from Jay Hatfield at Infrastructure Capital Advisors.
Yes. He made the point quite starkly. Nvidia designs the H20 to comply, then the rules change, and bang, a potential $5 billion loss.
He called it inconsistent trade policy, highlighting the real cost to companies trying to navigate this.
It really underscores the financial risk involved when the regulatory landscape is, well, unstable.
And wasn't there a connection suggested between the H20 chip and some AI developments within China, something called DeepSeek?
Yes, the DeepSeek R1 model. It's reported to be a ChatGPT-like AI, and the interesting part was the claim it was trained much more cheaply than comparable U.S. models.
And the speculation was that the H20 might have played a part in that training.
That was the suggestion, yeah. Its emergence certainly surprised some people in the tech world and seemed to really galvanize AI development efforts in China.
So fast forward to last week, and Nvidia gets word from the U.S. government.
Correct. They disclosed in a regulatory filing that they were told H20 chip exports to China would now require a special license.
Despite China being a pretty significant market for them, what was the figure, 13% of sales last year?
That's right, 13%. So not insignificant by any means.
And this directly leads to that $5.5 billion charge they're expecting in their next earnings report.
Yes, expected for the first quarter earnings on May 28th. It covers H20 inventory they have, purchase commitments they've made, related reserves, basically the fallout from this sudden restriction.
I saw some analysis, I think, from Wedbush Securities, Dan Ives.
Yeah, their take was interesting. They sort of downplayed the $5.5 billion number in the grand scheme of Nvidia's total revenue.
Right, like it's a lot of money, but maybe manageable for a company that size.
Exactly. But they emphasized the strategic blow. Losing that direct line or having it heavily restricted to Chinese customers is the bigger long-term issue.
They framed it as sign the U.S. government sees Nvidia as absolutely central to the AI revolution, didn't they?
They did. Their note basically said the administration knows Nvidia is the company fueling AI right now, so the restrictions are targeting that key player. It's quite pointed.
So it really puts Nvidia squarely in the crosshairs of these escalating U.S.-China trade tensions.
Absolutely. They've been navigating this for a few years now, as the U.S. has increasingly tried to limit China's access to advanced American tech, particularly for military and AI purposes.
And the Commerce Department made it official just this past Tuesday, confirming the new license requirements.
Yes, they confirmed it. And it wasn't just Nvidia's H20, it also included AMD's MI308 chip and anything deemed equivalent.
So hitting multiple players.
Right. The Commerce spokesperson basically reiterated the commitment to safeguarding national and economic security, acting on the president's directive.
And Nvidia's filing suggested this license requirement isn't seen as temporary.
It indicated they understand the requirement is expected to remain in place indefinitely. How those licenses will actually be processed or granted, though, that remains unclear.
Still a lot of uncertainty there. Nvidia hasn't said much more publicly, have they?
No, just what was in the official filing. They're likely being quite cautious.
Now, some analysts apparently expected eventual restrictions on the H20, but maybe not quite this suddenly.
That seems to be the consensus, yes. Morgan Stanley analysts, for instance, described the timing as more abrupt than anticipated, which, could suggest the U.S. strategy is maybe accelerating.
And going back to that DeepSeek R1 model, you think its emergence played a role in this timing?
It certainly seems plausible. After it came out and demonstrated strong capabilities, apparently trained on on less powerful hardware. There was a bipartisan push from U.S. lawmakers for tighter controls on AI chips.
So, cause and effect, potentially.
It looks that way. And in the meantime, AI development in China hasn't slowed down, if anything. DeepSeek seems to have spurred more investment and urgency there.
We've even seen that reflected in investor confidence, right? Stock market boosts in China and Hong Kong tech sectors.
Yes, there's been a noticeable uptick. DeepSeek and other major Chinese tech firms were significant customers for Nvidia's H20 GPUs.
Now, what about domestic Chinese alternatives? Companies like Huawei or Cambrune?
They do exist, and they are developing their own chips that could, on paper, compete with the H20. However, the general view from analysts like Brady Wang at Counterpoint Research is that they still lag behind Nvidia.
Lag behind in terms of raw performance or
both performance and, perhaps more critically, the software side. The whole ecosystem around Nvidia's chips, the software maturity, is a huge advantage.
And is that gap expected to close quickly?
Wang suggests it might actually widen, despite China's progress, like DeepSeek. He points to Nvidia's ecosystem and manufacturing strengths as key differentiators. It shows you can do impressive AI with less powerful chips. But Nvidia still holds an edge.
Let's zoom out again for a moment. The WTO report we mentioned earlier, it painted a picture of the broader economic impact of this trade friction, didn't it?
It did. It basically argued that the trade war initiated under President Trump has dampened global economic prospects. Growth is projected to be slower than it would have been without those tariffs.
And particularly impactful in North America.
Yes, the WTO forecast suggested North America, dominated by the U.S. economy, would see a more significant slowdown compared to other regions. They put numbers on it. Global GDP growth revised down by about 0.6 percentage points this year due to tariffs.
And even more for North America.
Potentially up to 1.6 percentage points lower growth in North America than the baseline scenario without the tariffs. So real, measurable economic consequences according to the WTO.
So, given all this, the analysis from people like Dan Ives at Wedbush that we should expect more restrictions, more punches thrown, seems pretty likely.
It feels like the trajectory, doesn't it? He called it an aggressive trade war. And the expectation is that this isn't the end of the restrictive measures from either side. It's likely to continue.
It's worth remembering this didn't start yesterday. The Biden administration began restricting advanced semiconductor sales back in 2022.
Right, initially framed largely around military concerns, preventing advanced chips from boosting China's military capabilities.
But it's broadened significantly since then.
Considerably. It now covers chip-making equipment itself, high-bandwidth memory, even products made outside the U.S. if they use American technology. It's become a much wider effort to, well, manage the pace of China's tech advancement in strategic areas.
And they even expanded it geographically, trying to stop tech reaching China via third countries.
Yes, that global export framework was unveiled, applying different restriction levels to different countries. The goal is to prevent leakage, essentially. Those rules are expected to take effect very soon, next month, I believe.
Of course, U.S. tech companies, including Nvidia, haven't exactly been silent. They've pushed back against these restrictions.
They have, quite consistently. Their argument generally centers on competitiveness. They argue these export limits will harm American companies in the global market.
I think Nvidia's VP of Government Affairs, Ned Finkel, put it quite strongly in a blog post.
He did. He talked about the potential for AI to drive global growth across industries, but warned that these restrictions put that progress in jeopardy.
Framing it not just as a U.S.-China issue, but something that could derail innovation and economic growth worldwide.
That's the core of their argument, that these policies might have unintended negative consequences far beyond the intended target, impacting global technological progress and economic opportunities.
It leaves us with a complex picture. Nvidia caught in the middle, significant financial impacts, but also these broader questions about global trade, tech leadership, and the future pace of AI development itself.
Absolutely. And with analysts expecting further restrictions, the key question moving forward is how both companies and governments will adapt and what the ultimate long-term consequences will be for everyone involved.
A lot to keep watching. Thank you for breaking that down with us today.
My pleasure. It's a constantly evolving situation.
Indeed. And to our listeners, thank you for joining this discussion. Don't forget to like and subscribe if you haven't already so you don't miss future analyses. We'll be back soon with another look at the forces shaping our world. Until then, goodbye.